Welcome to the program. On the episode today, I'm going to break down Tesla's most recent earnings report. Earnings are down significantly, but the share price was up sharply this morning. We're going to look at the reasons there. Also, Apple sales in China are hurting. We're going to update you on those numbers. Here in Canada, Equifax is looking at ways to include your history of rent payments into your credit score. Is that a good thing or a bad thing? And the law has been signed. TikTok faces a U.S. ban in under 1 year. Today is Wednesday, April the 24th, 2024. Let's get started with today's top stories. Tesla shares are up over 12% when trading open this morning. And this is as investors are digesting the company's Q1 earnings report. The report, no question, was disappointing, but the prospect of what's yet to come with Tesla has investors apparently in a pretty positive mood. If we look at their first quarter net income, that was down by 55%. It fell from $2.51 billion a year ago to $1.13 billion. Revenue was $21.3 billion. That too was down 9% from last year due to a nearly 9% drop in worldwide sales. The company attributed the decline to increased competition, slowing demand for electric vehicles, an arson attack at its German plant, and the factory downtime during a switch to an updated version of the Model 3 sedan. Earnings came in at 45 cents a share, and that fell short of analyst estimates of 49 cents. Gross profit margin fell to 17.4%. Now that's down from 19.3% a year ago, but it saw a peak of 29.1% in Q1 of 2022. So that's a pretty significant decline there. Tesla did warn that its vehicle sales growth may be notably lower than last year as it's working on the launch of its next generation vehicle and other products. Now, this next generation vehicle that they're referring to is likely the smaller Model 2, which is expected to cost around $25,000 and be much more competitive in the market. The company is also counting on a fully autonomous Robotaxi, which is set to be unveiled on August 8th as the catalyst for future earnings growth. And that's where I can see that on that optimism, the share price might be at this morning. I will be honest, I'm a little bit skeptical that as of August 8th this year, they're going to have a fully autonomous Robotaxi, but we'll see what they're able to produce in that period of time. Now, over this past weekend, Tesla cut $2,000 off the price of models Y, S, and X in the US and made the similar cuts in other countries, including Germany and China. It also reduced the full self-driving cost by 1/3 down to $8,000. Now back to the report. In the first quarter, Tesla manufactured 433,371 vehicles, but they delivered 386,810. So there's about 46,000 and change more than what it sold. Now last week, Tesla also announced it would be cutting 10% of its workforce. That's 140,000 full employees, so it'll be roughly 14,000 as a cut there. Key executive Andrew Baglino, he also announced that he would be leaving the company after an 18-year tenure there. In addition to this, the company announced that it would be asking shareholders to restore that $56 billion pay package for Elon Musk that was rejected earlier by a Delaware court. So it's clear here that Tesla is facing challenges which are reflective of, quite frankly, an industry-wide problem. That said, it's also working on these new initiatives. If they can execute that will drive the future growth of the company. I say certainly will be interesting to see how these plans unfold in the coming months. In a recent financial update from the first quarter, Apple's performance in China's smartphone market notably declined. Shipments dropped 19%, which is now their poorest showing since 2020. The decline now results in Apple's market share falling to 15.7%, and that's down from 19.7% a year earlier. This is in sharp contrast here to Huawei, which saw its sales up by 70% year over year. That now holds a 15.5% market share in China. The market share leader in China is Vivo, which currently holds a 17.4% share. Now, Apple, which of course counts China as its third largest market, which accounts for 17% of its total revenue in the previous quarter, they face broader challenges beyond just this market share issue that they're having with Vivo and Huawei. Global data points to a nearly 10% drop in its worldwide smartphone shipments in general, primarily due to strong competition from Android device manufacturers, for example, Samsung. In fact, Samsung has now overtaken Apple. It stands as the top spot in global smartphone sales as of the first quarter of 2024. Despite the challenges here, Apple does remain hopeful about its future performance in China. During its first quarter, Apple kicked off several promotional efforts, including significant discounts on certain iPhone models to prop up consumer interest there. Now, Ivan Lam, he is a senior research analyst at Counterpoint Research, and he believes that ongoing improvements to the product will help iPhone sales. He says, we are seeing slow but steady improvement from week to week, so momentum could be shifting. For the second quarter, the possibility of new color options combined with aggressive sales initiatives could bring the brand back into positive territory. Now, personally, I've always owned just plain, boring black iPhones, but I guess according to this analyst here, the color of the iPhone is in fact a selling factor, and I am legitimately curious here. What color of phone do you own? Would you buy a phone just because of its color? Leave a comment below. Today's episode is brought to you by QTrade Investing, which is the winner for the top spot in the best online brokerage experience for Canadian investors. Thank you to QTrade here. If you are looking for a brokerage account, explore their suite of offerings. They include more than 100 commission-free ETFs. They have real-time quotes. They have advanced portfolio analytics, stock screening tools, analyst reports, and more. And with over 20 years of experience, QTrade is trusted by self-directed investors. With instant account opening, their platform makes it very easy to open and then manage accounts from anywhere. Plus, right now, you can get $50 upon opening and funding a new account, up to $150 for 3 accounts. Now, you can join QTrade now. See the link in the description box below. Equifax Canada has launched a pilot program to see if rental payment histories can be used to enhance credit scores. And this would theoretically particularly benefit individuals who might not have extensive credit histories. It could potentially make financial services more accessible to a broader range of people, including young Canadians, new immigrants, and those underserved groups. Now, Sue Hutchison, she is Equifax Canada President and CEO, and she says Equifax Canada has been leading the way and has been modeling how rental payments, just like mortgage payments, can help build a credit score. The government of Canada has also expressed support for this idea. Prime Minister Trudeau, he recently highlighted the importance of recognizing the financial efforts of renters, especially younger Canadians who invest a significant amount of their income into renting. And as part of this push, the federal budget called on banks, fintech companies, credit bureaus to create tools that would allow renters to opt in to report their rental payment history. If this does come to fruition, it could really help renters in Canada establish stronger credit scores, which in turn might sort of help them along that path to home ownership by qualifying for mortgages or securing lower interest rates. Again, Trudeau says in this regard, renters matter and young Canadians put a lot of their hard-earned money towards rent. We think that should count for a lot more. Now, as always is the case, this proposal has its critics, and concerns have been raised about potential risks, especially, ironically, for renters who may struggle to make payments on their rent due to high rental costs that we're experiencing these days. Elizabeth Mulholland, she's the CEO of the charity Prosper Canada, and she stressed the need for renters to have control over whether their payment history is shared. And she cautions that mandatory reporting, should it become mandatory, could adversely affect low-income and vulnerable Canadians. Equifax is currently holding ongoing discussions. They're conducting tests that are aimed to address these concerns that they brought up here. They are legitimate concerns, and to see if they can explore how to effectively integrate rental payment into the credit assessments without inadvertently penalizing renters. TikTok now officially finds it at the heart of growing tensions between the U.S. and China. The U.S. government, through a major national security bill that was just signed into law by President Joe Biden, this has presented TikTok's Chinese parent company, ByteDance, with an ultimatum. They either sell the app or they face a shutdown in its largest market by early next year. Democratic Senator Richard Blumenthal, he says TikTok is a gun aimed at Americans' heads. The U.S. contends that TikTok poses a security threat, and it highlights the fears that the app can be used for espionage or as an informational weapon by the Chinese government. Critics of the app argue that ByteDance could be forced to hand over user data to Chinese authorities, and they cite China's legal system that demands compliance from its companies with state intelligence operations. Now, meanwhile, TikTok and its supporters are arguing strongly against these claims, and they point out the lack of public evidence tying the company to actual data sharing with the Chinese government. And they emphasize that the app's role in the livelihoods of numerous U.S. content creators and its operational independence in the terms of data management. Now, Shou Chu, the CEO of TikTok, he pushed back on the new law. He said, make no mistake, this is a ban. We will keep fighting for your rights in the courts. The facts and the Constitution are on our side. So when we look out for the next year, TikTok no doubt is going to be facing a rough year. They've got these legal battles to deal with. They've got the potential sales negotiations under these rather difficult conditions here. And then, of course, the volatile political landscape this year in the U.S. with the election coming up. The whole situation is then further complicated by the Chinese government, which may, of course, obstruct the sale of TikTok outright. And then, of course, the broader geopolitical tensions that are surrounding technology and security between the U.S. and China. On Saturday, we'll have the next edition of our Pulse newsletter out. I will put a link in the description. I would encourage you to visit the site, sign up, so you don't miss our weekly wrap-up. As always, thank you for watching this video. We will see you soon.